10-year Philippine Treasuries accelerated to 6.7%. Given its inverse relationship to the PSEI, will the stock market go down? And how low can it go? Let's discuss. I'm Dan Slim, and welcome to another episode of Monday Market Outlook. Now, inflation data came in last week at 5.4%, and it's welcome news since it's the slowest increase since April of 2022. Now, this puts inflation rate well below our current interest rates at 6.25, and this further supports a rate pause by the BSP. Will inflation continue to go down in the coming months? However, the minimum wage in Metro Manila increased by 40 pesos to 610 per day. This should benefit around 2.5 million workers in the metro. As to what effect this will have on inflation, we will have to wait and see. So speaking of wages, gross national income numbers came in last week, with the Philippines maintaining its lower middle income economy status with a $3,950 per capita income. Of course, this news also came with criticism over the fact that Vietnam has overtaken us with a 4,010 per capita income. But some good news though, GDP numbers for Q1 came out at 6.4%, with Philippines ranking among the highest in the world. And if you guys are wondering again about Vietnam, they are at 4.14. So hopefully we will be able to overtake Vietnam in the coming years, as the projection is for the Philippines to become an upper middle income country by 2025. MPI announced last week its final tender offer for MPI shares at 520. While this is still below analyst expectations of around 5.7, it's still a 12-point bump from its previous tender offer at around 4.63. This caused MPI shares to gap up next day to 4.98 and has been holding steady at 4.96. You know, the 520 tender offer represents a 5% upside from its current price. Will it be another week of speculation as the market continues to digest this offer? Now, if you've been accumulating MPI for the past years, if we look at this chart, you should be okay. But if you bought MPI for the last 10 years, you would probably just break even at 520. That's a lost decade, right? Some investors have this notion of diamond hands, that if you hold on to the stock forever, you'll eventually make money. And there are a lot of cases where this really doesn't hold true, as we can see here. If you were buying during the first 5 years, you were buying at a price significantly higher than 520. And then eventually, if you were buying in the last half of the 10 years, you should be making money off of the tender offer. Even Warren Buffett doesn't hold the stock forever. He knows when to buy into a company, and more importantly, he knows when to get out of a stock position. His reasons would be when something better comes along, when company fundamentals have changed, or a single position has become too big. Remember that, it's easy to give people advice on what to buy, when to buy something, but the critical part of trading here really is learning when is the right time to sell a stock. I think it's a good enough tender offer, and my advice, while MPI is a good company, the stock price doesn't reflect this, so it's probably time to get out. Along with talks of a tender offer and a potential delisting of MPI in the stock exchange and the index, our dark horse candidate is rumored to be a shoe-in for the index spot vacated by MPI. Remember that Bloomberry price went up during the initial tender offer and had a drawdown when that tender offer was not accepted by the market. The latest tender offer could probably explain the 6-day win streak of Bloomberry. And of course, when the news came out, this is a classic case of buy the rumor and sell the news. So let's look at the PSEI charts. The index fell 95 points down to 6,379 at the close of the trading week. Once again, back at our critical zone for 7 times already. And as we mentioned last week, we saw a confluence of resistance here at the 6,550 level, and this brought the index to its lowest close so far this year. While it's possible to get a bounce this week, we have to be open to the possibility of this bounce encountering sell demand at this resistance trend line here before continuing down to its 61.8 fib. What's concerning also here is the sudden acceleration of the Philippine 10-year Treasury yields. If we look at the chart, the 10-year Treasury yields went sharply up to 6.75%, breaking the 6.56 resistance. A breakout from this level could lead to 6.9 and even 7.1. Going back to our PSEI chart, at 6.75%, Philippine Treasury yields, guess where it puts the fair value of the PSEI? Puts the fair value right at our 61.8 fib at 6,250. So could we see a last-ditch effort for the PSEI to bounce this week only to encounter sell demand on its way to 6,250? This for me could be an interesting zone to watch. Potential bargains could present itself. So make sure to subscribe and stay tuned as we continue to monitor the markets together. In the next week, we head into earnings season, and hopefully we can get some good earnings data from PH companies that may provide some life into the markets. Also take note that the FTSE and MSCI rebalancing is due at around August 11 or so. And there are rumors of several Philippine companies that will be downweighted, which may induce further weakness into the markets. No? So for now, again, we have to wait and see. So on to the global markets. Employment numbers again came in strong as we saw the ADP numbers coming in at a whopping 479,000. No? It's the highest gain since 2022. ADP is the company that processes the payroll of 400 company clients, representing around 20% of the US private sector workforce. It's used as a pre-indicator for employment numbers. On Friday, unemployment rate numbers came in on target at 3.6%, but it's still lower than last month's 3.7%. Next week, we will see inflation numbers, core CPI, the CPI numbers, as well as the PPI numbers, which would add to the Fed's decision on July 26. As it currently stands, the target rate probability at 93% is already pricing in another 25 basis point rate hike in their upcoming July 26 Fed meeting. Now, looking forward to their September 20 meeting, we have a 70% chance of a rate pause, while currently we have 24% of the market predicting that there will be another rate hike by September. So let's look into the S&P 500 chart. The S&P 500 futures ended the week at 4,400. The market reacted widely to the ADP report with a 1.3% drawdown before it recovered a bit. Again, this could be a healthy pullback as FOMO traders may see this as another opportunity to get into the markets. As it stands, the trend is still going up as we have a higher high, and currently this is still a higher low. Now, looking at the seasonality charts here, the first half of July tends to be strong before we encounter a significant drawdown during the second half of July as we go into the seasonally weak months of the year. So we still have a bit of an upside. So this is how the S&P 500 is currently moving, so we are right on target. So we still have a bit of an upside to go for the next week or so. As we can see in the chart, there are only a few good opportunities to buy the dip if you are a dip buyer. No? So we have here Feb or March, and we have the upcoming Q3 months in August, September, and October. So going back to the charts, we could still see a potential rally to 4,500 before the market bears take over, possibly in the second half of July. Options lines plotted here has the call wall at 442 and the put wall at 430, right, with maximum pain at 438. Not a useful stat so far in the past weeks, but it might be worth noting as we enter into the third week options expiration. Looking forward to the coming weeks, it's the start of earnings seasons for quarter 2 results. This would be very interesting to see how companies did and how Fed rate has affected their earnings. This will give us a better clue on how forward PE ratios will affect equity premiums. Banks and airlines report first. Will revenge travel give airline stocks healthy earnings this quarter? Big tech follows in a few weeks, and it would be interesting to see how the Magnificent 8 stocks did during Q2 and if their earnings justifies their current level. Are we going to have a second AI wave this quarter? We will see, right? So that's it for this week. I hope you enjoyed our episode. Please subscribe to the channel, like this video, and again, good luck on your trades. Manage your risk accordingly, and I'll see you again next week. Bye-bye.